What's up, wizards? Sean here, and I gotta tell you, this market downturn has been crazy. It has caused me to lose all my hair, so don't worry. When you see my hair's grown back, then you will know you are back in profit. Okay, wizards, so before we get into the options and futures Quedex trading platform, let me take you through the strategy that I deployed today and why. So the first thing I want to put it into context is the price. So Bitcoin is at a bit of a low compared to its recent highs. Now the speculation that I'm entering into is that between now and the end of March, Bitcoin's price will go up again. And the reason I say the end of March is because when I look at the options chain, 3 months is like the furthest I can go into in terms of expiration date on Quedex. So I'm going to stick with 3 months. I'm going to go the longest I can because I want to buy myself as much time as possible. Now, the reason why I want to do that is, let's say I buy Bitcoin right now, place a market order and I buy Bitcoin with the dollar and I put a stop loss over here and I fix my risk. Well, that's great. The price can go down and then it can rocket up again. So it can cut me out of my stop and rocket up again. And I don't want that. I want, if the price goes down, I want to be able to see what happens and manage my positions accordingly. So I want to buy myself that time. I want to fix the amount of loss I can have and maximize the potential. And the way to do that is with a call option. Let me show you what I mean. If I place a hypothetical trade, so I'm going to buy one call option that gives me the right to buy Bitcoin at the future at a specified price. And the price right now is about $9,275. So $9,275. And I'm going to put it in with an exercise price of say $9,000, which means this option would already be in the money. So it would be quite an expensive option, but for every dollar that Bitcoin goes up, my option will also increase in value. And the next thing I want to look at is the expiration date. Now we know that that is the end of March, as we already discussed, but there are two things that I really care about: volatility and the underlying price. Those are the two things that I consider most. Now this is my very first Bitcoin option. So what I want to do is go over to Quedex. I want to look at the options chain for the $9,000 strike price. And if you don't know how to find that, click on options, look for the $9,000 mark. Okay, so here we are at the end of March option. So what I'm going to do is plug that latest bid, because where I want to place my order is at the bid. So what I'm going to do is place that in there and see what the implied volatility is. Now it's 104, call it 105%. Now, volatility with Bitcoin options is massive, which means this option is going to be very, very expensive. Now, the nice thing about that is we can also make money on volatility, and I'm going to take you through that in a second. Risk-free rate, I'll put it about 7%. That's not really that relevant right now, so you can ignore that, but I'm going to add in that position. So when we look at this, we can see that if I bought an option and this was for $9,000 or $9,275 worth of Bitcoin. So if I put that much money in the option, this is what I would be seeing. The option would only cost me $1,600, and I would make money with the Bitcoin price going up, and I would have a fixed amount of loss if the Bitcoin price goes down. Now, if you don't understand how that works, go and watch the first video that I posted on YouTube way back that was talking about options and how Bitcoin options will be very useful when you can trade them. Well, now we're trading them. And so I can see that the price has to break past 10,275, so just above actually that mark, probably about 10,700 for me to even break even. Now, that's all fair and well, and that's great because now I've limited my risk. I have until the end of March. We can see what happens. If it moves into profit, I make money, etc. You know, if I looked not at the expiration, let's just say at the 1st of March, actually, if the price moves quickly in that direction, I can be in profit with the price being even lower than that. So anyway, let's go back to the end of March. You know, I know volatility is very high. So how can I use this to my advantage? Well, what I want to do is go back to the options chain, look at the 30th of March options, and let's go down and look at, say, the 12,500 strike price. So I'm going to look at that, and now I'm going to take it from the asks because, again, I would place a limit order. And I can see, wow, the implied volatility for that is 143%. So would it not be more advantageous to sell an option in this case? Well, if I sell an option, my risk is unlimited if I just sell one option. So let's see how we can use this in our favor. Now you'll notice that I use the strike price of $12,500. Pretend that you buy a call option for $12,500 as a strike price. The option will be very cheap because the price has to move a long way for you to start making money. So if I sell that option, I'm still selling it for cheap, but the volatility is quite high. So it adds a premium for me. Let me show you what happens if we go back to our playbook and we add two strategies together. So if I go and set another position, so position 2, and I'm going to sell a call option, and the price we said was 9275. The exercise price we're going to put at 12,500, 2018 and March the 30th, with an implied volatility of 143%. And yeah, this is actually a bit higher, but never mind, it doesn't matter. So I'm going to add in that position. Now this is very interesting because the amount of money that I can make is now limited, but the amount of risk that I had has also reduced. And the price that it needs to get to at expiration is about $1,000 less in movement for me to be in profit. So what's the downside to this? Well, if the Bitcoin price moonshots past the 12,275 mark or 13,275 mark, I don't take any more gain. Well, why is that? Because the option that I sold, I now owe that money to that person. But the reason why it doesn't get worse past that is because I also own an option. So because I'm buying an option that makes more money as the price goes up and selling one with volatility that's not great for the person buying it, where they are making less money as the price goes up. If the price goes down, because I get the premium, their option becomes worthless if the price goes down, then I take all that money and it cuts out a lot of the loss I would have made on buying my option. So there's a lot going on here. I know it can be very confusing. I'm really happy to answer questions as well on the Telegram group. So go over to that. I'll put the right link this time below so that you can go to that page and ask questions. But it's pretty much a very interesting strategy. Now let's go to Quedex and see how that's playing out for me. Well, if I go back to the 9,000, and I'm not logged in right now for obvious reasons, but if I go to the $9,000 strike price mark, I can actually see my order there. You see that 261? That's me. That is me in the market. That is my order there. And I can actually see the price moved up against me. So it didn't fill my order yet. Once that price has been executed, once that order has been filled, I will then go in and place the order where I go and sell the other option, the other call option, this one over here. So this one I have an order in for right now. And then this one, once that gets triggered, I will go in and place that option so that I can take advantage of the price movement like so. And if Bitcoin continues to dive all the way till the end of March, and I was that wrong, then I only lose a certain amount of money. Now, the one thing I need to mention is this model I'm using was built for the CBOE and CME contract. So it assumes that one Bitcoin is equal to one contract. I'm not placing anywhere near this kind of money. I'm just testing out this new platform. So I only put in like $300. But the interesting thing is that, and what I love about Quedex, I gotta tell you, this is what I love about it, is one contract is $1. You don't need a lot of size to trade options here. Now, even though I placed an order and the price has moved away from me, well, I own the Bitcoin. So even though the price is moving up, I'm not angry about that because I own Bitcoin. I'm still making money on it. So even though it hasn't filled my order, I'm pretty happy. Let me also tell you why I didn't place a market order. First of all, let's look at something called the spread. So if I go and punch in here the bid price right now, and I'm going to go and copy this one, which is the ask, and let's have a look at the spread. So if I look at the difference between the two and look at that as a percentage, 23% I would lose. If I bought at market and sold at market instantly, I would lose 23%. With this strategy, because I'm buying, I'm in a pretty good position because I'm buying, and if the price moves up, well, the asset I own, because I own the Bitcoin right now, goes up as well. But if the price goes down, it catches me, I get into that trade, and the hope and the prayer is that this happens, that the price when it hits expiry will be anywhere in this bucket, because if it is, I make money. And if it's anywhere down here, my risk is limited. So one of the nice things about Quedex as well is they have cold wallet storage, etc. But I'm going to treat Quedex like I do any other exchange with cryptos. I'm not sure how safe it really is. I have done some research. I try to keep my videos short, so I'm not going to go too much into this, but I've just shown you a way that you can use that to your advantage. If you're selling an option, I haven't placed a trade yet to sell an option on here, so I think it's probably worth you just seeing how that goes, and I will update you as these trades evolve on Quedex. But I hope you found that really useful, and until the next video,